Good morning and welcome to Trade Today. I am back. Good morning, Eric. Can
Good
you hear
morning,
me
Larry.
okay? I'm out of the wilderness and back on the grid. So I'm happy to be back. A lot to talk about. Got some earnings that came across. More earnings today, especially S&P ripping at an all-time high and will not stop. That's really the story of the day, and what we've discussed for a while. And I missed the last two podcasts, so you can kind of fill me in on what Clint and you were speaking about. And I appreciate Clint stepping in for me when I had some spotty Wi-Fi. And I'd love to catch up with that. But S&P is at 6,400, and the only thing that pops into my mind really right now is when we were talking about how high retail, traders and retail investors were buying into the market at 5,900, and we thought that was so crazy because it's 1,100 points from where we were, and now we're another 500 points quick in a month, less than a month, and the move expansion has been just incredible. Everything's set up to you know, be unbelievable. And like even stuff like yesterday, like Google's number was, better, obviously, but, they were spending more on CapEx and, not a lot. But somehow after the close, all these, FinTwits and all these other things were pumping up Nvidia like $100 billion on $10 billion in CapEx spend. So I just think that the market is running on, complete exuberation. Um, the one that was weak was Tesla, but Tesla now isn't. No one cares about it. It's not a darling, down over 6.5%. Whereas other stocks that are up or up, but not that much. And the market is, kind of ripping higher, especially on NASDAQ. And what was funny is, I've been watching the markets very, very carefully here. And NASDAQ yesterday was fully underperforming the S&P, where NASDAQ was down like 80 and the S&P futures were up like 14. And today they're reversing that, and it's like day after day, like this trend. It's very, very strange. And Nvidia looked really bad. It got down to 165, and now it's 172 and a half in literally a day. So I don't know what's really changed there, but I guess it's the CapEx spend potentially. And literally markets are sitting here. We're looking to short this opening on the S&P. I hope it, holds up. Market. It's hard to really determine. Market's up 3, 4 S&P points, but the cash ran big, so it's really up a little bit more. And the macro picture to me is still, as I would say, yuck. It's a yuck macro picture. Yesterday, the market kind of rallied because there was supposedly an EU trade deal with 15% tariffs. And
and a Japanese trade deal. Don't
yeah,
forget
and
that
a
one.
Japanese trade deal, which, it's funny. I mean, not that we really need to know every in and out of the deals, but don't you think we'd want to know really what those deals are saying and how comprehensive they are and what they look like? And they're not out in the public marketplace. So I don't know how everybody is so excited. So I'm going to use one of our old Fed chairmans. I'm going to use one of his terms. I'm going to use irrational exuberance. And we're
Oh
seeing at a
boy.
level I've never seen it at. This is very, very out of control of what we're seeing here. The bottom line is, um, markets are running. They run whether the news is good, whether the news bad. And to me, the movement feels a little bit irrational. There's no
Why?
pullbacks
Why? Why does it feel irrational? You
because
don't think it was a good
the
trade
earnings.
deal? Great trade deal.
What was it?
Do you think it was a bad trade deal? Why is it?
What is a
Why is the
trade
market
deal, Eric?
irrational here?
Eric, we're 900 points in S&P higher than we were before he announced anything ever. Okay, he's done 3 trade deals out of 300. Okay, and now you're telling me this morning before we got on the podcast, which I don't see on any news service, that he's pushing the tariffs back again. So
Forget
I
about the tariff rates. We were talking about this 3 months ago. I said the big thing about these trade deals isn't the what the rate is going to be. It's whether they're going to open up their economies for U.S. industry and companies like GM, the entire industrials, any industrials ETF yesterday was just ripping.
Yeah, but how
Stocks like
I'm not I don't understand how you're thinking that. Okay. I was over in Japan. Okay. You have no understanding unless you go there of their culture and what it's about. And they're not buying one thing from us. Okay.
oh, they've
You
been protectionist for centuries. I know that
no,
100%.
but it's not even protectionism. They don't even have to. It's just the way that they're built and the way that their culture is. And you can go into a 7-Eleven or you can go into anywhere. You don't see one good from the United States and you never will. Never. So if you think they're buying our goods, there's no way. Yes, they'll produce our goods, okay, which they've been doing for years. They're not buying our goods, along with China. Okay. Now, listen, I think it's different potentially with Mexico, which isn't even a big, you know, it's not a big deal. And then obviously Canada. Where are those trade deals? What's going on there? I just don't understand. You can say whatever and you can say how great the trade deal is and how they're opening up and whatever. I just don't see it. I don't see it. I think the cultures are so different. Okay. There's their gas isn't even equivalent to our gas. Like, so the bottom line is you can't even bring a US car. The only cars I saw that were US in Japan were Teslas. Other than that, there's not a GM car in the country. Okay. There's no cars. Okay. So they went crazy with GM and, cars,
yeah,
but there,
GM was up a lot yesterday,
I
wasn't it? It was
understand, but
up a lot.
there's no cars going there. But I don't want to beat a dead horse. That is my opinion. I'm seeing things that are fully irrational. Okay. We just ran another, let's say 12, 15%. There's no forward earnings support for this. Okay. And again, I look like I should wear like a little clown suit because I look like the clown. Okay. In the sense that no one, wants to be cautious. I want to remain cautious. Okay. And that's how I'm playing it here. This last 10% run that we've been watching is whatever. But in what we do as traders and how we maneuver in the market, this move, I mean, I don't know for your P&L, but this move really hasn't hurt my P&L in any way. Okay. In most of the stuff for the products, we're sidestepping the up move. We're looking for other opportunities, but obviously we missed it. It's just very difficult for myself to buy a market and sit in it. Now, definitely buy it, but to sit in it and just ride it along, even though that's been sort of the easy trade here. But it's been slow. And if you look at volatility, unless you really caught a stock that moved big, it's really hard to make money in this up move on broad index because the markets, as we touch on every day, are pricing in such a low move. Yesterday again, I'm sure the straddle was, $20 and we move 50. So, the markets.
Actually, I got hurt on that. I actually got that was yesterday. That Iron Condor for the first time in a long time did not work, and it was to the upside. And I'm bullish, and that was a stinger a little bit yesterday. But yeah, I was a little bit surprised how I thought the market was pricing in all of this trade deal stuff. So, every time you'd see a headline, a negative one, the algo would take over, push everything down, get the weak hands out, you buy it. I was kind of thinking, okay, same thing to the upside, but the upside risk is bigger than the downside risk in this market, even with these headlines.
Yeah, but my question is this: is there an EU trade deal right now? I don't see it. I don't see it anywhere. Okay, I don't see. Yeah, he announced it, but I don't see it. Okay, and the only thing that was happening in the EU yesterday is they were meeting with China. Okay, that's the only headline that was real here was they were meeting with China, and the bottom line is that it makes literally no sense because there, you know, I don't see the trade deal. Do you? Where is it?
Well, you see what do you want to see? You want to
I
see
want to see the
physical,
actual deal.
you want to see physical evidence of the trade deal, or do you want to
No, I
see
want to see the trade deal signed, a
documentation?
signed trade deal. Okay. They said
Uh,
that
no
they're close.
documentation.
They said they're close on a trade deal. That was the headline. They're close on a trade deal.
I don't
Okay.
think they. I don't think there would be an announcement if there wasn't something uh, to it. I don't think the market would
Okay.
stay
So
up
let's say they did an EU trade deal. What
by
about?
Tesla just tobogganing down on their report. I don't think the market would still be up here if this trade deal was fake.
I'm not saying it's fake or not fake. You're the one that came on to me on this morning before the podcast and said he's rolling back the tariffs. So why would he be rolling back the tariffs again? You
Was
said
that
that.
me or was that somebody else? Are you sure that was
No,
me?
that was you. You said Besson said they were coming out to move the August 1 deadline. That's what you told me at 8 o'clock this morning. So whatever. If that's not what you said, that's all good. But anyway,
Okay.
let's touch a little bit on macro. Your favorite gold, great trade. It's actually my best trade in the last 2 months has been in gold. Just every time it rallies, fade the move, and every time it goes down, you can buy it. So right now, that's range bound, coming back down to the bottom end of the range. I don't know what you think about gold, or if you've given up on your bull stand, dude. I think you're bullish on everything. What are you bearish on?
I'm bearish on bonds.
Oh, you are. Okay.
Yeah,
Well,
I'm bearish on bonds.
honestly, we could talk about bonds right now. We're floating back to a 440 yield, right, on the 10-year. And I think it keeps doing the same thing. It's kind of what I touched on a little bit before we came on the air also, is that this is the only market, the S&P or global equities, that has not mean reverted in any way. And the beauty of what we do, though, is if you stay out of trouble here and we catch a 2% down move, we're going to make a lot of money, 2 to 3%. That's all we need, and I think today's opening is a fade. I don't see it. Do you see anything? Are you looking at equities? Do you see any equities up? I mean, I know Nvidia's up $1.50. Google, after being up and down last night, is up. That's actually up fairly decently. That's up 3.7% now. It was actually down about 5% after earnings. I don't know if you traded that name yesterday, but that was a good mover after the close, up and down. Um, But Tesla's the real story, going to be maybe down 8, 10% today. It's now down almost 7%. What do you think of Tesla?
It's hard. I mean, is Tesla's like it's probably like the hardest Mag 7 to value. Um, uh, and it probably has the biggest up and down range out of all of them. Uh, it's a weird one. Like sometimes it's just purely sentiment driven, but there's so many moving parts within it. You have the car company, you have the tech side. It's kind of hard to value. I don't know. The way I trade Tesla, I look for that big stupid move in either direction, and I played that way. But long term, I mean, how could you be bearish on Tesla long term? Now, are you bearish on the stock price? Those are two different things.
Well, it's funny. We actually have a product that looks at Tesla, and we came up with this anomaly that we've run like back tests for a bunch of years, and we call it like the Tesla glitch. So every time, like this is setting up to be like a Tesla glitch, and it's like algos overreacting to moves in Tesla, and we've seen big mean reversion moves back with a misinterpretation, whether it be earnings or a plant fire or, Elon, going crazy tweeting. And we've seen this. I mean, you've looked at it too, I'm sure. And Elon fighting with Trump, stock goes down 30, and then all of a sudden it's quiet for 3 days and it rips back up. So this probably is an opportunity in here, to basically take advantage of an overreaction potentially to news. So, I would play this as sort of a mean reversion trade, but as we're speaking, S&P is leaking lower. I think we're going to have a fairly decent sized down day today. I just maybe we get a percent, which if we do, we're going to have to, they may have to, what was that July of last year when the market crashed for one day? They may have to stop trading if we go down 1% today. I mean, 50 handles up is no problem. 50 handles down is a big problem. But, I'm a little leery. You're very positive on all these trade deals and all this stuff that's coming out. And I think it's bogus. I think, we saw the real deal in 2018, and the real deal in 2018, Eric, took months and months and months and talks and talks and talks to even come up with a trade deal with China. How are they doing a trade deal with the EU?
I'm glad you brought up 2018. That's exactly what this year is kind of looking like. Y- the market would sell off on tariff headlines, obviously this year in a much bigger way. But it was like the same thing. They would sell off on headlines. It would be the same talking points. Tariffs are bad. We get it, and the market would buy back. What ultimately got the market down that year wasn't tariffs. Wasn't any of that. It was the Fed against the market, and that's usually the case.
Well, look,
We'll,
that's
we'll
great
get
that
to
you talked about the Fed and all of that. Guess who's visiting the Fed today?
Oh yeah, that's right. That is. It's good that you
Donald
mentioned that.
Trump is going to the Fed. It hasn't happened in over 2 decades that anyone has visited the Fed, okay? Because he wants the branch of government that he's in to control the Fed, okay? Which the forefathers basically put this stuff in to protect, okay, the
There was no Fed.
independent
There was no
body.
Fed back.
Yeah, there was. There was a Fed, 100%.
There was a
Go watch
Fed back then,
go
really?
watch
Okay.
Hamilton, dude. Why don't you watch the show Hamilton? He'll teach you what they did, okay? Yeah, there was a Fed, okay? It wasn't called the Fed, but basically they were running it through a centralized bank, okay? Same type of thing. Body was totally separate. They set it up. Alexander Hamilton. Okay, they'll teach. Watch the show later. He'll give you the history. But anyway, the body was created many years ago to operate separately from the government branch of of the country, of an elected official that only serves a 4-year term. So now he's going over there to dude, what's he going to do? Like bang on his door and go, "Are you in there? You lower rates, lower rates." I mean,
That's
it's
such a
actually I mean, it's amazing how the market just discounts everything. I mean, this guy wants Trump out. I mean, wants Trump wants Powell out so badly that it's unbelievable, and he's pushing every button. He said, I think it was yesterday, that they're trying, they can get rid of him for fraud. So what are they doing? Trying to find fraud on the guy now that he spent more money building the Federal Reserve office? I mean, it's so distracting and unbelievable. But listen, here we sit, market, no
So
one wants.
wait. You think he's actually going to go through with this kind of? He's going to look for a reason, and he's going to find that in some bill that was. First of all, every government project is rife with fraud and corruption. Any government spending that you have like 30% of that actually required for the job at hand, and 70% is probably like graft of
No,
some
that
sort.
I don't know. I don't know
So
why.
if he really wants to find something bad there, he'll find it. So is he going to
Well, I
actually
don't
try to
know,
use
but
that and fire him?
here's the thing, and I don't want to spend too much time on it because this is really esoteric, crazy stuff. Here's the thing, okay? Uh, the guy only has 8 months left. What do you need to do in the next 8 months? Why don't you just sit tight, let the 8 months expire, bring in, whoever your guy is that's going to listen to everything you say. The reason why he selected Powell is because he thought he could control Powell. He was going with Warsh the whole time, and then he switched at the very end to Powell because I think he thought he was weak, and actually Powell turned out not to be that weak, not to kowtow to, his needs. But my question to you is, why would any Fed governor, okay, or even someone he appoints, start lowering rates because he thinks rates should be lower? And even if let's say they lowered rates 2% from here, what is that going to really do? I mean, you have, a housing market that's overheated, unaffordable, and slowing down very, very fast outside of a few areas such as Florida. But like New York real estate to me feels very, very toppy with a lot of stuff on the market. So I don't know what that's going to do by lowering rates. I just think it's like a thing in his head, like tariffs. Like he thinks tariffs are going to do something so big. Listen, he came out, he was tariffing countries 30, 40, 50, 60%, talking about how much revenue that was going to bring in. Now he's down to 15% on the EU. We were taxing them at 10%. So he's getting an extra 5%. I mean, it doesn't seem like that's going to help your coffers in any way. But, you know,
Yeah, I agree. But the first part of your question, is he actually going to get somebody to lower rates? You mentioned Kevin Warsh. He's been making the rounds on financial media,
he's
and
not he's not the guy. The guy's
well, he's been criticizing. It was weird because when this talk of Powell getting fired started, literally like 2 days later or a day later, Warsh was on Fox Business. He was on other channels, I think, and he was bashing the Fed, and he was like, "I sympathize with Trump. I understand this point," and it felt a little bit like a dress rehearsal.
he's not the guy. He's not the guy. Bessent's the guy. Bessent's going to run.
Really?
Oh, 100%. He is kissed Trump's ring. He's done everything that he's wanted. He's the guy. He knows he could push that guy around. So I think he's the guy. But we will, we'll see, how that goes. It would be interesting to see. I don't Obviously in history that's never happened. Someone that's the Secretary of the Treasury going to run the Fed. But we'll see. But there's a lot of interesting things, and people have been writing in. Asking us, we talk about the Iron Condor. You love that. You talk about it pretty much all the time. It gives us the setup for the trading day ahead for all the people that are watching today. So I don't know if you can, people have asked how we get that. So basically, we get that by pricing the at the money straddle on a zero DTE, which is an option that has 1 day or today to expiration. And that's how we get what the movement is. So I don't know if you can share a screen of the
Yeah,
option page. That would be great.
sure. And I'll do that with the SPX, which is what we trade every day. And it has a ton of volume. Fonts are a little low, so I'll kind of zoom in. I'll try to zoom in.
I
But
need my I need my glasses
so
for this.
yeah, yeah, yeah,
I
yeah.
can't see it.
You know what? I'll try to pull it up on the Bloomberg. It'll be much bigger. But
Yeah,
basically, what we
SPX.
do is we just price in. We just add up what the call at the money is with the put at the money. So, like for instance, the S&P 500 closed yesterday. Let's call it 6360. All right, the futures are flat today, so we can still use 6360. And let's see for today. What do we got? We got to choose the weekly. And here we go, 6360. So you have the calls trading at around 1050, and you have the puts trading at around 9. So that's around a 20-point straddle.
That's as low as I've seen it. But that, for people that are watching,
It was
for pe-
like that yesterday.
for people that are watching, we have Bloomberg. We have access. We use Bloomberg. I also use other trading systems, but you could find that on your trading system by, going to the option page, choosing on this. You choose weeklies, but depending on your system, you got to call up your provider and get to the zero DTE, and it comes up every single day. So you can have that every single day, and that gives us a price guideline. And like Eric said yesterday, it was wrong. It's wrong a lot. It's just,
Yeah,
it's what we would call, we don't like to use the word betting in trading, but if you're, into sports and, you look at a football line, the Lions are playing the Cowboys and the Lions are favored by 7 points. That doesn't really mean a lot to a lot of people unless you're betting it. But what they're saying is, hey, this is what we're thinking is going to happen in this game. So what they're saying here is this is what's going to happen in the game today. So the game today, they feel like $20 is going to end up. Now it doesn't, it could go above and below that. Like yesterday, it ended up 50, so that straddle blew out $30, and it takes a lot of days to make that loss back. Because you're suffering a max loss, but it could be up 50 and then come down like Wednesday of this week. Or actually, I'm sorry, Tuesday of this week, we were up a lot. It was either Monday or Tuesday. I think Tuesday. We were up a lot. And then the straddles were, or the Iron Condor was taken out at a max loss if the market ended there. And then the market came back into range. So a lot of days you can buy this thing and actually make money. But this is what we use every day. And I think it's important for people, like, we trade every day for every day, and we want people to be prepared for the trading day ahead. So we utilize this to just give us sort of a formatting of what the movement is. And if you go back to COVID, which, was a long time ago now, but the straddles every day during COVID, we had a 50-60 on a 50-60 volatility. You got that same $20 thing trading at $100. So, and we were moving 100. So this pricing knows what they think the market is going to do. And most of the time, it's correct. So that's, why we utilize that. And I'm hoping that it helps people.
That doesn't mean, and also for those watching and saying, okay, well, I hope the people that are watching aren't thinking that we think, or are saying that the straddle definitively means that the market is going to stay in that 20-point range. What tends to happen more often than not is it'll breach 20 points in either direction, but then come back in when markets are like this, where everybody's complacent, which they are. Everybody's complacent. I'll give you that, Larry. And and but and it's been working over the last 3 weeks precisely because the market has been so complacent and comfortable. But it doesn't always work like that. Like like selling, it just gives you a guide, but it's not a trade. So just kind of
No,
keep
but
that in mind.
what happens is, and the reason why the straddle is priced so low is because the S&P is so high. It hasn't had any type of pullback. It's in an uptrend. It can't have a down day. So it's really almost betting against the fact that the market can go up 20. The down 20, which should happen easily, never happens. So they don't count that. That's why, listen, if the market got choppy and started trading down, this straddle would be 35 to $40. And what was interesting, I was watching the market early yesterday. The straddle for the 2 days for tomorrow started yesterday very high and then got crushed. And, if you look at volatility, we haven't discussed this. Volatility is in the 15 handle. Usually when this happens, it's showing exactly what we talked about, major complacency. So the markets are very complacent. The move is still up. The market doesn't have a down day. Once that trend starts to change, you may see the straddles obviously pricing higher. And the straddle is a direct reflection of the volatility. So volatility is low, the straddle's low, uncertainty is low. They're pretty certain everything is really good. So, I just wanted to go over, the straddle, how we look at it, or the Iron Condors, which is not the straddle, it's the out of the money put and out of the money call. I find it over the last week or two very difficult to find any value in doing those trades. We're looking at spreads that are a dollar, that are 15 points wide right off the opening. So we've been very sporadic in our trading on these. We definitely expect it to pick up. We just need a little bit of uncertainty, and you know, right now we're not seeing it. No matter what the earnings are, they're conceived to be really good. And you got 3 trillion, 4 trillion, $2 trillion companies that are coming in with numbers that are beating. But still, if you look at it, it's just the amount of expansion in market cap just doesn't equate to what's going on out there. But again, it's funny. You're saying this reminds you a lot of 2018. This actually, to me, and it's probably early innings of this reminds me of 2007, 2007. Okay.
Wow.
I'm not saying we're
Okay.
going to have a 2008, financial crisis, but I saw a disregard for anything out there during 2007 leading into 2008. And that's what scares me a little bit now. And I was running a lot of money back then, about 1 billion. And I had people coming to my office and like saying to me, why can't you do this? And why aren't you doing that? And you should do this. And everyone's making money and da 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 da. And I'm like, listen, this is not going to end well. And I'm saying this, what we're seeing now, is not going to end well. The story of the year has not been written. This is this is retail running up a market into a summer. Look at the E-mini volume. They're record low volumes every day on a record high S&P. Why is that so bullish? We got terrible volumes. We got hedge funds just stepping away, letting the public pay whatever. Yesterday, they were buying meme. Now they're adding to the meme stocks like GoPro, and all these other names are going ballistic. Um, I just think the froth is there. And, you're shaking your head. This isn't '08. I'm not saying it's '08. I listen, we just rallied over 40%. That's bigger than the crash of 1987. Okay. And we did that in 2.5 months. So we had a reverse crash, right? We've rallied 40% in NASDAQ. So we haven't seen moves like this in our history. So to have a natural pullback and a correction is not, I don't feel like a big deal. And a correction is, technically 10%. And then a bear market is basically 20%. And the NASDAQ was fully in a bear market, and it blew back up 40%. So I don't know how you don't think there's froth in the market when the market just went up in 2.5 months, 40% in NASDAQ from the low.
But what is it up on the year?
I don't know, 7, 8, 9.
Is that a
Okay.
lot?
Well, that's
Why?
not
I
a
mean,
lot. That's not a
it's
lot
a
in
lot.
6 months. That's double the
It's a nice
average.
number.
That's double. Come on, dude. That's double the average over the history of the market. So we're trending double the average after we had a
Yeah.
crash. And then add last year up 25 and the year before up 25. You don't think that's froth.
But
Okay.
you don't think that this froth could continue all throughout the summer?
It can continue forever, dude. I
No,
don't
it's
know.
not
I
going to
mean, this is
continue
a new
forever.
paradigm. I mean, listen, you're moving. Listen, you have Nvidia. Okay. Nvidia has 25 billion shares. You know how many shares that is? It's by far the biggest
I just
shares.
said it. 25 billion shares.
Right. It's the biggest by far. Okay. And you can't buy 10,000 shares anywhere. Okay. But there's 25 billion. The difference is, and I don't want to get into it because we're late in the podcast and I just want to just get people set for today. But I was a specialist. And if you had specialists like we used to have on the floor, you could never have market moves like this. The reason why you have market moves like this, and I don't want to get too into it, is because of high speed algorithmic trading, front running other traders, everyone knowing when buy orders are coming in and blowing the market up. So that's what I'm seeing. If there were specialists like there were on the floor of the New York, the American, etc., this would never happen because it wouldn't be able to move in this kind of speed. I was a specialist. I kept orderly, tight markets. They couldn't move markets like this. This is crazy. You got 25 billion shares. You got a stock moving $4. You got 100 billion in market cap coming in and out of that stock every day. Okay. That can't be because of earnings. It's just a day trade. So anyway, I think the market's frothy. I think that it's speculative. You think the market being up 8%
I
in the
think what
first
you re,
6 months of the year
part of
is
what
not
you're
a lot.
I think part of what you're saying also in regards to the market reaction like it was yesterday on trade talks is the market is trading ideas and maybe not so much earnings and actual details.
Dude,
There's 100%.
well, let me
That's
ask
a
you
hundred.
this. And I want to get close to wrapping. Do you think Trump is going to fire Powell?
Yes, yes, he
Okay.
will.
So then why
I
is
think
the
he will
market?
find a way, but I don't think he's going to do it right now. I don't think he's going to
Well,
do it.
why is he waiting? If he
When it's
waits
going to
another
become,
if he waits another 4 months, the guy will be out in 4 months. There's no reason for him to do it. But
yeah, but isn't
anyway,
it the middle of next year?
here's another thing I don't understand. Why
Wait a
do
second,
bond
isn't it the middle of next year though?
what?
When is Powell's term
I
actually
think
up?
he's
Isn't
eight
it
months. I think it's 8 months.
8 months? Right.
So, whatever. I mean, that's not the middle of next year, but it's the beginning of next year. All I'm saying is I'm looking at the bond market getting crushed. I'm looking at, you know, things out there. Dollar is terribly weak. Things are, dude, if the bond was up 20 or down 20, do you think the market cares?
20.
20
It's a lot.
ticks, 20 pips,
Oh, no.
not 20 basis points, 20 pips. Even at 20 basis points, the market wouldn't care. So to me,
Right.
that's frothy. But anyway, I think if gold comes in a little bit more, uh, 33.30 area, I'm looking to buy a little bit. Bond yields still stuck in the range.
Welcome. Commodities look good this morning. Oil, nat gas, gold buy on a dip, maybe buy silver on a dip. These are the wild thoughts I'm
Dude, I'm
having today.
waiting. Yeah, I'm waiting for you to come up with some sell ideas, dude. Everything is buy. Buy this, buy that. You love to what?
Looking,
You know what? You're a product. You're literally, and we're gonna end on this today,
I'm
guys. And
short
I hope
Nvidia with you. That's not
listen.
working.
I'm
I'm
not
short
short. I
Nvidia
am
with
not.
you.
I am not short Nvidia. Okay,
Well, I am so.
I covered Nvidia. Okay, and I was actually long
I don't.
Nvidia.
I didn't cover it.
Okay,
I didn't cover
so now I'm getting short
it. Paired
Nvidia
up against
again.
a lot of longs.
I'm not sure. I was not sure. I was short Nvidia when it collapsed, and then we got out. We had puts, and unfortunately, we got out a little bit too early. But we could have really captured another 2 points on them. But they're going to the option graveyard, so you got to be careful. But my idea today, I'm looking to get short a little bit here. If the market goes down, which isn't a lot, 15, 20 handles, I'm going to get a little bit more aggressive, and then more aggressive if it goes down. If the market doesn't, I don't expect it to go up much, but we'll watch that. Again, there's a lot of things out there. The dollar is so weak; it's very, very scary and disheartening to see such a weak dollar. Bonds sort of going to touch
But
up
the thing
against.
about the dollar, I'm sorry, the thing about the dollar that I actually like, even though it's dropping, is the fact that it's been moving up and down with U.S. rates, which is a change from earlier in the year where you saw rates go up and the dollar drop, which is not a traditional relationship. The fact that a lot of stuff in macro is kind of looks like it's back to that traditional relationship. Doesn't that tell you a lot of macro risk is kind of subsiding here for the time being?
Why? Because of a weak dollar? I don't think so. I mean,
Yeah.
I don't think so. I
No, just
mean,
the fact that it's going up and down with rates, which is something that it
I
always has
don't,
done.
I don't see that. I mean, we're back to 118 on the euro. It's a little lower today. I mean, the thing can't hold a rally, the dollar. I don't like it here. But anyway, we're getting close to the opening, so we'll want to wrap again. The only thing I'm thinking is maybe sell some upside call spreads. Maybe use, for our products we'll use today, but for people out there that may want to do some other things, maybe do a 2 day into tomorrow. Again, we're up every week. I don't remember the last time we've had a down week. Markets have rocketed, and again, that's what I'm seeing. I'm seeing stuff around the market being ignored, which makes me a little nervous. And listen, I want to wrap. So I wish everybody good luck trading today. We're close to the opening, and I hope you guys got something from the podcast today. I think we covered a lot of good stuff, and you can always watch it live on Trading with Larry on YouTube. And I wish everyone luck today. Enjoy, Eric.